Morning, ladies and gentlemen. This is new New York opening Forex commentary for FXStreet, brought to you by FXDD. We just had the ECB announce that they keep their interest rates unchanged. We also are expecting Jean-Claude Trichet to be speaking at 8:30, and it seems like the market is putting the screws on him, looking for some sort of comment in regard to maybe even the value of the euro. We're seeing the euro getting screamed against the Swiss franc here today as the S&P took out their bid in the euro Swiss, and that is causing that to fall down rather sharply to, in fact, to new lows for that currency pair since the ECB was the euro was created as a traded currency, and this coupled with the euro heading down to new lows here was also may require that the Jean-Claude Trichet talk about what they're possibly going to do. This chart here is of Greek yields, and you can see actually the Greek yield, and this is a spread between the 10-year Greek bond and the German Bund, and that's at the highest level over 800 going to 800 pips here, or basis points actually, and the yield on the Greek 10-year bond is up at the highs. So, and we're seeing Portugal yields and Spanish yields. What happens if they start moving higher? If the demand in sovereign debt starts to really disappear, is the ECB ready to step in like the Fed did in buying mortgage-backed securities when no one wanted mortgage-backed securities? Is this a cycle that we're going to see from the ECB going forward? It's a tough decision, and this is not in Trichet's blood or the ECB's blood to do this sort of thing. So it'll be curious how the market reacts and what actually happens or what he actually says. There are some people who certainly say that he should come in here and support the market, but then there's another side that says, well, as long as we have an orderly euro decline, maybe this is a time that the euro weakens itself out of a recession, just like the U.S. the dollar weakened itself to the point where we got out of a depression, moved to recession, and now recovery. Maybe it's the euro's time. So with all that said, we trade from a technical basis. It doesn't matter what the fundamentals are, because the technicals are going to tell you what the fundamentals are thinking, and so you always have to be prepared for corrective type moves no matter what. But let's start off with the euro Swiss. You can see here on the daily chart the market is moving to new all-time highs for that or lows for the euro Swiss. This low came in at 140, 143 back here on April 1st, and the low here today came in at 140, 139. We are finding some buyers against that level currently, 140, 150. Not and there may be a point where the Swiss National Bank does come in and say, okay, this is where we want it right now. But the market's going to definitely push them in that direction and see where that level is may or may not be. Now let's go to the euro versus US dollar. What is key here is this channel trend line here. We came down, this all started on Friday, and there's a number of different points along this trend line. One, two. We had one little lone wolf that went out of the way there a number of different times, and then earlier in the London session we came down, tested that level right here. Like I said, we had one little lone wolf here where the market quickly rejected. You can see the tail there, and we just came right back down to that level right there, and we bounced rather nicely here. So we're seeing we're seeing a nice little tail here, just like we saw here, tail here. This is our support level, and that's where we found support. This is acting rather technically, if you will, and we'll continue to watch this support level on the downside. On the top side, what do we have? We have this top trend line. We haven't been above that trend line, and we went and tested it yesterday. We didn't test it here today. So 128.36 would be a level that you want to have on your charts at 8:30 when Trichet comes in and starts to speak. So that's what we're going to do on our 5-minute chart. Put a little line and cross in here at 128.36. That's going to be a key level. The other thing off of this 5-minute chart here that we like to look at is the 100 and the 200 bar moving average. You can see how the day started. We moved above the 100, used the 100 as support, moved up to the 200. In between our goalposts, this is what we call the goalpost. 100 bars is one goalpost, 200 is the other, until the market breaks out one way or the other. We continue to trade, so we come down to the 100, we get break through that level, come back up Get a few little stray Indians here, and the market then sells off rather sharply, comes back up to the hundreds, retraces back down to the 50% of the day's range, then moves up and tests the 200, to go right up to the 200, then it starts its move to the downside using the 100 once again. So needless to say, do you have to be a rocket scientist here to figure out that there's going to be resistance up here at the 100 bar moving average on the 5-minute chart? And that comes in at 127.93. If the market off his comments gets above that level, our next target is going to be through the 200, and if we get through the 200, where's the next target? The 128.36 level, and so on and so forth. Those will be the progressions to the upside. Now on the downside, we already know the downside support. The downside support comes off our hourly chart, and that comes in at this low here that we just had here, and that currently comes in, I think, around the 11 level, 127.09, 05 or something. Each hourly bar goes down another 3 or 4 pips. So we'll be watching this trend line on downside. If it breaks below that, then then we have to go to our daily chart and look at our daily chart. Actually, we may even put it on weekly here, and take a the weekly chart and then start to look toward 124.56, 127.04 is another key support level down here that we see here in the currency pair. So that's a lot on the euro, but it is, needless to say, still in the news. And speaking of sterling, they have election this week. I forgot. This is another key currency pair, but it's getting the back burner to the euro here, and you can see that it too is following along a nice little channel trend line here. This has a 1, 2, 3, 4, 5 or 6, and on the top side we have 1, 2, 3 different times on the top side. So we had a few little stray Indians here, and those are quickly reversed, so we'll ignore that, but we have a nice little channel there, and that's pretty obvious here. So with the market trading at 150.79, we're kind of right in between those two channels. Where's the top side resistance off of this chart? 151.23. Where's the bottom support? I can't even see that. Let's go 150, let's call it 150.0910 even. On the downside, we'll be watching that for support. Taking a look at the 5-minute chart, just like we did in the euro, and this is looking a little bit more positive in that we just broke above the 100 bar moving average on this chart. That 100 bar comes in at 150.71. The 200 bar comes in at 150.91. If we break through the 91 level, we should see further moves to the upside. For this currency pair. If we break below the 100 again, we should see the market be disappointed that we failed moving above the 100 and starts its move to the downside. So that's how I play that currency pair. Take a look at the dollar Swiss. The dollar Swiss, we did break through the 61.8% retracement of the move down from the 2009 high to the 2009 low. That 61 comes in at 111.84. The market went above that last night and then came back down on the Swiss National Bank, pulling their bid in Euro Swiss. You can see how that reaction there. If you take this low, from this week to this high, a 38.2% retracement comes in at 110.48. Is that possible? Of course, we were just there yesterday. It's not out of the question for the dollar Swiss to head on down to that level. Where is resistance on the top side? Where is the risk? I put in a Fibonacci here from the low from yesterday to the high. 50% comes in at the 111.33 level. You can see how the market came down to that 111.33 level and then use it as resistance right here, use it as resistance here. So that's our risk. The market breaks above 111.33. That would be my risk if we get above that level. Then I think we head up toward this way, and then perhaps even toward the 100 and 200 bar moving averages starting to move downside together on the downside, and they're both at the same level. Take a look. That's it for our report. Good luck with your trading. Again, everything risk increases at 8:30 with Trichet. Watch at 127.11 level on the downside. If that level gives way, look for further selling down to 127.04. Show at 127. But the trend is your friend, and in this case, the euro dollar seems to be wanting some sort of action by the ECB, some sort of, and if not, then it might suggest that they want a weaker euro and weaken and currency themselves out of a slower growth ahead. This is Greg McCloskey with FXDD with a Forex morning update for FX.